how to build an emergency fund for yourself. If you want to build an emergency fund for yourself, here are some tips to help you build. 1. Determine how much money you need in your emergency fund. To determine how much money you need in your emergency fund, you should consider your monthly living expenses. These include things like rent or mortgage payments, utilities, food, transportation, insurance, and any other irregular expenses you have. A good way to estimate your living expenses is to look at your past bank statements and credit card bills to see how much you typically spend in a month. It's also important to include any additional expenses that you might incur in an emergency, such as medical expenses, car repairs, or legal fees. Once you have an estimate of your monthly living expenses, you can calculate how much you need in your emergency fund by multiplying your monthly expenses by the number of months you want to have covered in your fund. As a general rule of thumb, it's recommended to have 3 to 6 months worth of living expenses saved up for your emergencies. For example, if your monthly living expenses are $3,000 and you want to have 3 months worth of expenses covered, you would need an emergency fund of $9,000. It's important to keep in mind that this is a general rule, and your emergency fund should be tailored to your specific needs and circumstances. 2. Set a savings goal and make a plan to reach it. Setting a savings goal and making a plan to reach it is an important step in building an emergency fund. Here's how to do so. Determine your savings goal. As mentioned before, it's surely recommended to have 3 to 6 months worth of living expenses saved up for emergencies. Calculate how much you need in emergency fund based on your monthly expenses. Make a plan. Break down your savings goal into smaller, more manageable chunks. For example, if your goal is to save $9,000 in 12 months, your plan might be to save $750 per month. Set a deadline. Give yourself a specific date by which you want to reach your savings goal. Create a budget. Identify areas where you can cut back on expenses and redirect that money into emergency fund. Automate your savings. Set up automatic transfers from your checking account to your emergency fund account on a regular basis. Monitor your progress. Keep track of your savings and make adjustments as needed. Be flexible. If unexpected expenses arise or if your plan isn't working, don't get discouraged. Revisit your budget and find new ways to cut back on expenses or increase your income. Reward yourself. When you reach your savings goal, reward yourself in a way that aligns with your values. It could be a nice dinner, a weekend trip, or a new book. 3. Open a separate savings account specifically for your emergency fund. Opening a savings account specifically for this fund is a good way to keep your funds separate and easily accessible. Here's how to do so. Research different banks and credit unions. Look for institution that offers high-yield savings account with low fees and easy access to your funds. Compare interest rates. Look for an account that offers a competitive interest rate. A high-yielding savings account will earn more interest than a regular savings account. Check for online banking. Choose an institution that offers online banking and mobile app access so you can easily transfer funds and monitor your account. Consider the minimum deposit requirement. Some banks may have a minimum deposit requirement to open a savings account. Make sure you have enough money to meet this requirement. Gather necessary documents. You will need to provide personal information and identification to open a savings account. Open the account. Once you have chosen a bank or credit union and gathered the necessary documents, you can now proceed to open emergency fund savings account. Set up automatic transfers. Setting up automatic transfers from your checking account to your emergency fund account is very important. This way, you don't have to worry about making manual transfers every month. Keep your account information in a safe place. Keep the information, including the account number and routing number, in a safe place so you can easily access it and when you need to transfer the funds. By keeping your emergency funds in a separate savings account, you can easily monitor your progress and avoid using it for non-emergency expenses. 4. Automate your savings. Automating your savings is an effective way to ensure that you consistently save money towards your emergency fund. Here's how to do so. Set up automatic transfers. Most banks and credit unions allow you to set up automatic transfers from your checking account to your savings account. You can schedule these transfers to happen on a regular basis, such as every payday or once a month. Determine the transfer amount. Decide on an amount of money that you want to transfer to your savings account each time. There should be an amount you can afford, and that will help you to reach your savings goal. Set reminders. Set reminders for yourself to review and adjust your automatic transfers if necessary. Use apps or online tools. Some online banking services and budgeting apps such as Mint allow you to set up automatic savings, transfers, and track your progress. Consider a Roundup app. There are apps that can be connected to your debit card and will round up every purchase you make and transfer the extra change to a designated savings account. Automating your savings will help you save money consistently, even when you don't have the discipline to manually transfer money to your savings account. By setting it up and forgetting it, you'll be able to watch your savings grow over time. Number 5. Monitor your progress and make adjustments as needed. Monitoring your progress and making adjustments as needed is an important step in building your emergency fund. Here's how to do so. Track your savings. Keep track of how much money you are transferring to your emergency fund savings account and how much interest is being earned. Review your budget. Review your budget regularly to see if you can cut back on expenses or increase your income to put more money towards your emergency fund. Check your account balance. Check your account balance regularly to see how close you are reaching your savings goal. Revisit your goal. Reevaluate your savings goal to ensure that it is still appropriate for your current circumstances. Adjust your automatic transfers. If you find that you're not saving as much as you would like, consider increasing the amount of your automatic transfers. Consider other savings options. Look for other savings options such as high-yield savings account, CDs, money market funds, or even a robo-advisor that can help you to earn more interest on your savings. Be flexible. Life can be unpredictable, so be prepared to make adjustments to make your plan as per needed. By monitoring your progress and making adjustments as per needed, you can ensure that you are on track to reach your savings goal and be prepared for unexpected expenses. 6. Keep building your emergency fund even after you reach your goal. Once you have reached your emergency fund savings goal, it's important to continue building your fund to ensure that you're always prepared for unexpected expenses. Here's how to do so. Set a new goal. Once you reach initial emergency fund savings goal, set a new goal to continue building your fund. A good rule of thumb is to aim for 6 to 12 months worth of living expenses. Keep contributing to your fund. Continue to make automatic transfers to your emergency fund account on a regular basis, even after you reach your initial savings goal. Review your budget. Review your budget regularly and look for ways to cut back on expenses and redirect that money towards your fund. Increase your income. Look for ways to increasing your income, such as taking on a side hustle or asking for a raise. Keep the account active. Keep your emergency fund account active even if you don't have money to deposit into it. Keep an eye on interest rates. Keep an eye on the interest rates even if they're high. Consider transferring your savings to a higher yielding account. Review your emergency fund regularly. Review your fund regularly to ensure that it's still sufficient for your needs and that it aligns with your current life circumstances. By keep building your emergency fund, you can ensure that you always have a cushion of savings to fall back on in case of unexpected expenses.